Hello students, I'm back again with another small concept in CMA Part 2, Section A. I've got a tremendous response from all of you for the previous two lectures. And as I said, my objective is to satisfy students going for professional exams. Your satisfaction is my objective. When you are satisfied, I am more than satisfied. So I'm happy to learn that my lectures are of some use to you and they have benefited you a long way. I intend to continue this throughout the journey of CMA that we are having, and I promise you to be there with you till the last. So today we are going to discuss two small issues or two small concepts in, as I said, CMA Part 2, Section A. It comes under special issues, and though it is a very simple and easy one, I'd like to go through because you never know. Questions can be asked in the examination based on this. So what we are going to do today is referred to as accounting and economic profit. Accounting profit and economic profit. So I will explain to you the concepts as I normally do, as I usually do at the beginning. And we will take a small example to see how to work it out and maybe a small MCQ on this. Okay, so let us start with accounting and economic profit. We'll start first with accounting profit and then we'll come to economic profit and then understand how to do the calculations with the help of example. Starting with accounting profit. What is an accounting profit? Explanation of that, the concept. We say that accounting profit is nothing but the profit that one normally shows in the revenue statement or the income statement. Okay, so when you prepare your final accounts and you prepare your revenue statement or income statement at the end of the year, you say that this is the income for the year ended 31st December. That particular income or that particular profit that you are showing is as per the books of accounts. Therefore, it is called as accounting profit. Okay. How to calculate this accounting profit? How to arrive at this accounting profit? It is nothing but the net profit. The net profit that we are showing after deduction of all expenses and after deduction of tax. Right? So it is calculated by deducting total accounting cost, which is called as explicit cost. There is a small I missing over there. So it is total accounting explicit costs, which are actually paid or payable by the company to another party from the total accounting revenue of the company. So in other words, you take your revenue, that is sales. From that, you minus all the expenses, all the costs, which are called as explicit costs. Okay. What are explicit costs? Those costs which are actually paid for by the company. The word is explicit. Okay. So it is the cost which is actually paid or payable by the company. Towards what? Towards, let us say, purchase of raw materials, wages paid to workers, electricity bill paid, rent expenses paid, salaries paid, advertising expenses paid. So all the expenses which are incurred, okay, including depreciation, all the accounting expenses which are incurred, which are actually paid for or payable for by the company, are called as explicit costs. Those explicit costs, when I deduct from the sales revenue, I get what is called as the net profit before tax. And minus the tax also from that, I will get net profit after tax. That is my accounting profit. So explicit costs include salaries, wages, rent, overheads, materials, and all other expenses which are paid for or payable for by the company to another party. It does not take into consideration any implicit costs. We'll see what is implicit cost when we are doing it. So as of now, I say that it is total revenue minus total explicit cost. Okay. So how to calculate accounting profit? What is the formula? Pay attention to the formula carefully. It is accounting profit is equal to total revenue, that is sales, minus total explicit costs only. Okay. Now we come to the concept of economic profit. Economic profit means what? Economic profit is that profit which is obtained by deducting from total revenue. By deducting from total revenue, what we are going to deduct, not the accounting or explicit costs, but the economic costs. Okay. Now, what are economic costs and how they are different from accounting costs? Economic costs include explicit as well as implicit cost. So, if I have to write the formula for this, I will say that economic cost is equal to explicit cost plus implicit cost. So now we will learn what is implicit cost. Okay. So explicit cost minus, explicit cost plus implicit cost. That is together total called as economic costs. Implicit costs are also called as opportunity cost. They are the cost of the next best alternative that had to be given up in order to achieve the company's object. Okay. I had a space, let us say, of 1,000 square feet, of maybe more than 1,000 square feet, say 10,000 square feet. I have a space of 10,000 square feet. I can use it either for my own business, set up a factory there, okay, start production and work, or I can let out that 10,000 square feet on rental basis and earn rent. So I have got two options with me. Suppose I decide not to give it on rent. If I give it on rent, I will be getting nothing less than $100,000 per month. Okay, because it's 10,000 square feet. So I'll be getting at least $100,000 per month. But I decide not to give it on rental basis and to use it for my own factory. And I set up my factory there. So what is the opportunity cost of setting up my factory? I have foregone the rent that I would have earned had I let that property out on rental basis. That is $100,000. So opportunity cost is that rent of $100,000 which I'm giving up in order to set up my own factory. Right? So that is called as opportunity cost, or also called as implicit cost. Therefore, the cost of lost time, the lost interest on investment, the economic depreciation are all examples of implicit cost. Now, you have heard about accounting depreciation. I'm going to tell you what is economic depreciation also. So the time that is lost, that is also an opportunity cost. The interest that is lost on investment. Now, since I'm going to purchase, and invest in my own business, purchase land and building, purchase equipments, okay, purchase machinery. So I'm investing in all this. So let us say I'm investing $10 million in my capital equipments, my capital assets. If I'm investing $10 million in my capital assets, what is my opportunity cost? Had that 10 million been invested, I would have got at least 10% returns on that. That means 1 million is my interest foregone, loss of interest on that amount invested in my business, invested on capital assets. Okay. So that is my loss of interest on investment. And then economic depreciation, as I told you, I'll come back to the explanation of the concept of economic depreciation. Economic profit, therefore, is calculated as total revenue minus total cost. And my total economic cost is made up of explicit cost and implicit cost. So total revenue minus explicit cost minus implicit cost is equal to my economic profit. So from the definition and from the accounting, from the equation that we have got here for accounting profit and economic profit, we can come to a simple conclusion. Whereas accounting profit, I am subtracting from total revenue only the explicit cost. From economic profit, I am subtracting not only the explicit cost, but I'm also subtracting the implicit cost. So obviously, economic profit will be slightly less than accounting profit. Okay, so that is my observation here from the equation that is given. Now let us come to the concept of economic depreciation. Depreciation in accounts, we have said that it is the wear and tear of the asset. It will take place even if I don't use the asset, right? So on account of natural wear and tear, on account of obsolescence, on account of extensive use of the asset, whatever decrease that happens in the book value of the asset, whatever decrease that takes place in the book value of the asset, that is called as depreciation, accounting depreciation. Or in other words, I can say it is a cost of using my capital assets, using my fixed assets in the business. That is accounting depreciation. But what is this economic depreciation? It is the decrease in the fair market value of the assets. It is a decrease in the fair or market value of the assets. So if I'm having something like, as I've taken the example, if fair value of an asset at the beginning of the year is $50,000, or if the market value of the asset at the beginning of the year is $50,000, and at the end of the year, the fair value is only $47,000. Fair value, I'm not talking about book value. So in both the cases, you can see that I've made use of the word fair value. So if the fair value of the asset at the beginning of the year is 50,000 and fair value of the asset at the end of the year is 47,000, then economic depreciation is 50 minus 47, that is 3,000. Okay, so this is something which you have not done in your college also. We have learned only accounting depreciation. So what is economic depreciation? I've told you now, I've taught you now. So new concept that you have learned, that it is decrease in the fair value or market value of the asset during the period. Okay, so today we have learned what is accounting profit, what is economic profit, how to calculate accounting profit, how to calculate economic profit. Now what we'll do is we'll take an example and we'll see how to do the calculation. This is your example. Johnson manufactures and sells metal pipes. Now the pipes that we are using for our water system, the pipes that we are using for our drainage system. So he is manufacturing those types of pipes. He receives $400,000 during the year as revenue from the sale of metal pipes, and has material and labor cost of $220,000 in total. No salary is claimed or taken by Johnson for himself. Johnson also pays $10,000 as interest on loan taken from the bank for business purpose. The accountant depreciates the machine used to manufacture the pipes at $10,000 each year. So this $10,000 that we are having here, it is accounting depreciation. If nothing is given further in the problem regarding that asset, I will take that as accounting depreciation as well as it will be my economic depreciation. But if you see the next line, you are given that the machine had a fair value of $300,000 at the beginning of the year, Okay, machine had a fair value of $300,000 at the beginning of the year and $280,000 at the end of the year. Now, why this is given? So that I can calculate my economic depreciation. So what is my economic depreciation? The difference between the opening and closing value, fair value, and that is 20,000. If Johnson had worked for IPCA Incorporation, he would have earned a salary of $40,000 per year. Investments are likely to earn at the rate of 5%. Loss of interest on investment. Alternate is salary, because I have said here, no salary is claimed by Johnson for himself. So he is getting nothing here. Proprietor cannot draw salary from his own business, and it will not be considered as a business expenditure because he is already having a share in the profits. But had he joined some other company, that is IPCA Incorporation, then he would have got a salary of $40,000 per year. Now he has forsaken that, so it is an opportunity cost. It is an opportunity cost. So what are my accounting costs here? That is explicit costs here, and what are my implicit costs here? My explicit costs, which I'm actually incurred, I'm liable to pay for, are material and labor costs of $220,000, interest on loan taken for business purpose $10,000, and the accounting depreciation of $10,000. That is my accounting expenses or explicit cost. What is my implicit cost? In addition to this, what is my implicit cost? When I'm considering implicit cost, I will not consider the accounting depreciation now because I'm having economic depreciation. So instead of accounting depreciation, I will have economic depreciation. Then I will be having loss of interest on investment at the rate of 5%. And I will be having loss of salary for Johnson at the rate of $40,000 per year. Okay, so let us work out the accounting profit and the economic profit. We'll start with the revenue of $400,000. Minus from that, the material and labor cost of $220,000. So total revenue is $400,000. Material and labor costs are $220,000. Interest paid on loan taken for business purpose is $10,000. Accounting depreciation, as per the accountant, it is $10,000. So $400,000 minus $240,000 gives me accounting profit of $160,000. So that is my accounting profit. Now let us see what is the economic profit. Economic profit is made up of explicit cost as well as implicit cost. So I start with total revenue, $400,000. Material and labor cost as usual. Okay, it will come to $220,000 explicit cost. Interest paid $10,000. Now, I will not take accounting depreciation of $10,000, but I will be taking the economic depreciation. Economic depreciation, implicit cost of $20,000. What else will come? Loss of interest at the rate of 5%. 5% of what? That we have to see. So let us come back to the problem. 5% of what? 5% of my investment. Investment in what? Plant and machinery. Investment in plant and machinery. Have they given me the cost of plant and machinery anywhere? No. They have not given me the cost of plant and machinery anywhere, but they have given me the fair market value as at the beginning of the year. So obviously, I will take that as my investment in machinery because I'm starting the manufacturing of the business. So at the beginning of the year, I have invested $300,000 in the machinery assumption. So had I not invested that $300 at the beginning, then I would have invested that in some other form where I would have earned 5% returns. 5% of $300,000 will come to $15,000. Okay, $15,000. So if I come to the calculation now, it is going to be $15,000. Loss of interest, $15,000. Loss of Johnson's salary. Had he been working somewhere else, he would have earned a salary of 40,000. So that is again opportunity cost. So subtract now 220 plus 10, 230, 250, 260, 305. So $305,000 I have to subtract from $400,000. So 400 minus 305 gives me an economic profit of $95,000. Right? So it is as simple as this. The only thing is that you should know what comes as explicit cost and what comes as implicit cost. And I've only introduced a new term here that is called as economic depreciation. Right? So all other items are same. I take the income, that is the revenue, minus all the expenses. And expenses, when I will take expenses which are explicit also and expenses which are implicit also. Fine. Second concept for the day. That is my first concept. I told you today I'm going to do two small concepts. This was the first concept, accounting and economic profit. Second concept, which is again a very small concept, is earnings quality. In most of the books, you'll find just one line or so regarding earnings quality. And when it comes in the examination, sir, you can explain to us what is earnings quality. And question had been asked in the exam. You should explain more now. You'll ask me this question. So what I've done is I said, okay, I'm going to explain this concept now of earnings quality. Again, it's a very simple concept here. Nothing to take tension about. We'll take the concept, we'll understand the concept, very simple. And then we will see a question or rather two MCQs based on this. Okay. So let us start with concept of earnings quality. What is the concept of earnings quality? Earnings means what? Net profit. Net profit after tax. Quality means what? How reliable it is, how much we can depend upon it, and how it is going to affect my decision-making process. Okay, so first I'll explain to you the points and then I will further explain with examples. It is a measure of how useful reported earnings are as a measure of performance indicator. We'll see what it means. Consistency of earnings is an aspect of quality. A company which has widely varying earnings year on year, YOI means year on year, no typing error, year on year, varying earnings year on year will be said to have low level of earnings quality. So high variance, widely variance, low level of quality. Okay, the following factors normally determine earnings quality: company's business environment, selection and application of accounting principles, character of its management, that is, you can say company's management, and you can say source of the investment, source of the earnings or source of information. Now let us come to the concept a little bit more in detail. Earnings quality. See, on the basis of earnings, that is net profit, as well as other profits which must have calculated on the way, that means in the revenue statement, I must have got a lot of gross profit calculation, operating profit calculation, EBIT, returns on capital employed calculation, net profit before tax calculation, net profit after tax calculation. Now these calculations are used, these ratios are actually used for interpretation, for analysis, and for decision making. So the earnings that I'm showing in my profit and loss account, that itself is not reliable. That itself is not of good quality. Not of good quality means what? Not reliable. Quality means what? Reliability. How far can I rely on the profit that I've calculated, right? Which can be used, or rather which will be used for interpretation and decision making purpose. So if my net profit margin is less, let us for example say that my revenue is high, revenue has increased from last year to current year by about 40%. Still my net profit is low. It means that somewhere down the line, I have to control my cost. I have to control my operating expenses. I have to control my manufacturing cost. So there are several factors which I'm going to take decision upon. Controlling of operating cost, controlling of operating expenses, controlling of manufacturing cost, manufacturing expenses. Why? Because my net profit shows a very low figure. But I tell you that your net profit is not showing the correct figure. It is showing a low figure of profit because of something. What is that something? Because I have undervalued stock. I have undervalued closing stock. So since I have undervalued closing stock, my gross profit is less. Since my gross profit is less, my net profit is also less. So the net profit that I'm showing to you is of poor quality, is unreliable, is of poor quality, because I have undervalued my stock. I've done mischief with my financial statements. I've manipulated my financial statements with the objective of showing less profit. The quality of earnings is poor. Not because it is less, but because I've manipulated to get that figure. So it is not reliable. On the other hand, it is also that had I overvalued my stock and shown more gross profit, or shown more operating profit, shown more net profit, then also it is the earnings are of poor quality, because it is not reliable. It is not reliable because I manipulated the books of accounts, or I have changed the accounting policies to suit my objective, to meet my objective. So earnings quality is a measure of how useful or how reliable the reported earnings are as a measurement of performance indicator. So if I say that, I have deliberately shown less profit, I will say that though the sales have increased by 40%, net profit is so poor, that means management is inefficient. What am I saying? I'm saying management is inefficient. I'm commenting upon the weakness of the performance of the management. But that is actually not correct. Why? Because my earnings quality is very poor. My conclusion is also poor. It's not reliable. It's not correct. It's not the truth. ठीक है? So अगर आपका जो earnings है उसको गलत तरीके से कैलकुलेट किया है, उसको मैन्युपुलेट किया है with a particular objective to show more profit, less profit, whatever it is, to suit your objectives, to suit your goal, your intention, and to deceive somebody else, then it is of poor quality. Now, what can be the factors? Let us see. Company's business environment, selection and application of accounting principles. I told you, accounting principles are selected in such a manner that I'm showing less of stock, I'm undervaluing stock. How that can be done, we'll see. Character of its management. Are the management themselves responsibly running the business, or are they overriding their own policies, overriding their own decisions? Overriding means what? कि हमने एक डिसीजन लिया है सबके लिए, लेकिन हम ही नहीं मानते उसको. Overriding means what? That I have taken a policy decision for everybody to implement, but I myself don't implement. I say all the students should come to class. My lecture is at 7 o'clock. All should be inside the class by 6:55. I'm starting my lecture at 7. So all students come on time. They come within 6:55. But I come at 7:15. I have made a policy which I am myself overriding. So I'm setting a poor example. Isn't it? So like that, character of management. And finally, source, from where you are getting that information. Sometimes, it is some things are based on estimates. For example, how much you are going to make as provision for doubtful debts. It's an estimate. From where you are removing that estimate? What is the source? You are saying that, sir, customers may not pay to the extent of 5%. How did you get that 5%? Past experience? You say, no, my competitor is providing 5%. So I will also provide 5%. But your customers or your competitor may be different from the customers that you are having. Followed. So you may require a higher provision or you may require a lower provision. But you are taking source as what? Competitors' financial statement. Yes, provided 5%, I will also provide 5%. Source. So companies which are vulnerable to business risk have lower quality of earnings, which can be easily influenced by changes in the market forces. Business risk. They have got lower quality of earnings. Whereas companies which are less vulnerable to risk have a higher quality of earnings. Second, when a company follows a conservative accounting policy, its earnings are considered to be of higher quality, more reliable, more sustainable. That means, suppose I'm conservative, what I will do, I will make a higher provision for doubtful debts. Okay, I'll make a higher provision for doubtful debts. So that we are safe. So I come to know what is my minimum profit. So I know that 5% is sufficient, but I make a provision for 8%. Plus or minus. Let us be on the safer side. Let us be a little bit conservative. Okay. If I get more, well and good. Quality of earnings will be more, higher. I should not get less than what I've anticipated. Minimum. People should be able to rely upon my figures as a minimum figures. Yes, this much will be guaranteed. Will be sure shot. Right? So if I'm more conservative, the quality is higher. If I'm aggressive, I say, array, I don't require to make a provision for doubtful debts. All my customers will pay. Overconfident. Or I say, okay, for namesake, we'll make a provision for 2%. Knowing that my customers may not pay to the extent of 5%. I'm aggressive. I want to show more profits. That shows earnings can be of low quality. If the management of the company is likely to, given a chance, overstate the assets or inventories or understate the assets or inventories or understate the provision for taxes and other liabilities, then the earnings quality is low. Given the opportunity, if you find that management is vulnerable to break its own laws, to break its own policies, to break its own regulations, then the earnings quality is poor. Then the earnings quality is poor. So that is what is meant by quality of earnings. It is less reliable. It is doubtful, less reliable. Okay. Let us take a CMA retired question. MCQ. Question is, a company would negatively affect the earnings quality. A company would negatively affect the earnings quality if it frequently does what? Constructs plant and equipments in countries with unstable currency. invested long term in an erratic stock or bond market, materially changed accounting estimates, or offered significant sales discount. Earnings quality will be affected if it frequently constructs plant and machinery in unstable countries, or invests in erratic stock market or bond market, or materially changes its accounting estimates, or offered significant sales discount. Now, if you see here, immediately it should strike you. Accounting policies. We said now, estimation of your implementation of accounting policies, selection of accounting policies, application of accounting policies. So if that is not going to be fixed, then there is chaos. Okay. So materially changed accounting estimates. This is the right answer. If you are keeping on changing your accounting estimates, for example, this year you are making 5% provision on doubtful debts. Next year you are reducing it to 2%. After that you are increasing it to 10%. Suddenly you are valuing stock by first in first out method. Suddenly you change the method and value it by last in first out method. Right? So there is no stable accounting policy. They are changing regularly. Then in that case, your quality of earnings will be poor. Which of the following statement is true? 4 statements are given. Economic profit is greater than accounting profit. Economic profits are accounting profits less explicit costs. Economic profits are accounting profits less implicit costs. And accounting profits are economic profits less implicit costs. First, let us write down the formula. Accounting profit is equal to total revenue. Okay, total revenue minus explicit cost. Fine. Economic profit is equal to total revenue minus explicit cost minus implicit cost. Now, total revenue minus explicit cost is equal to accounting profit. So I'll substitute here. Economic profit is equal to accounting profit minus implicit costs. Economic profits or accounting profits minus implicit costs. So it is option C. Economic profit is greater than accounting profit. No, I told you economic profit has got something more to be deducted. So normally economic profit is less than the accounting profit. Economic profits or accounting profits less explicit profits. No, accounting profits when you're calculating it is already deducting the explicit cost. Right? So again, if you deduct the explicit cost, it will be double deduction of explicit cost. Accounting profits are economic profits less implicit cost. No, accounting profits will be economic profits plus implicit cost, not less. Okay, so we have come to an end of this session. Next session, I will be taking on part 2, section B, where a number of you have got a number of doubts, a lot of concepts. So as I said, my objective is to simplify your CMA exam, to give you maximum possible support, whatever I can, I will, and to ensure that you are clearing your exam after going through the concepts. The basic objective, the basic manner, many times you ask me, sir, what should I do to clear my exam? Can you give me some tips? Yes, absolutely. I can give you the tips. Why not? The one and only tip that is required for you to, or the one and only thing that is required for you to clear the exam is that you have to strengthen your concepts. If your concepts are solid or rock solid, then you can attempt any question under the sun. Okay, and here I will share with you a personal experience of mine. I had given my CMA part 2 first and then part 1. As normally the students do, they give part 2 first because it is easier. Part 1 is a little bit difficult and a little bit more lengthy. So part 2 is given first. So I also gave my part 2 exam first. It was the first CMA exam that I was facing, and that also under COVID conditions. So lot of tensions, lot of anticipation, lot of apprehensions, lot of anxiety. What type of questions can be there? New method of going for the exam with the mask and all those things, a lot of you're washing your hand and doing all these things, COVID restrictions. So under all those restrictions, the frame of mind is totally different. I went for the exam. Of course, I had solved all the questions of my MCQs as much as possible, done all the essay questions. And after that, when I went for the exam and I saw the questions, my God, I was thinking that the weightage that was given, that would normally be followed. But in my paper, that weightage was not followed. And two particular topics were heavily tested to the extent that you can say 40 to 45% of my paper was just on two topics. One was obviously professional ethics in that, and one was risk management, I think. Two of the topics were there. And those topics were actually theoretical topics, which covered at least about 40 to 45% of my paper. And questions were, totally unseen questions, and it takes a lot of time for you to think all those questions over. Those type of questions. So what to do now? I had literally panicked. And we were told that out of the 100 MCQs, you should attempt all 100 MCQs. I tried my level best. I could not. And believe me, I was able to solve only about 75 MCQs. I also knew that if 50% or more of the MCQs are not correct, I will not be taken to the essay section and my examination will be terminated there. So when I reached the 3 hours, I was able to complete only 72 to 75 questions. And I was planning to go home for an early tea break and surprise everybody at home that I've come early, because I was not expecting to clear the exam. How can I clear the exam with 72 MCQs? Why I took 72 MCQs only for 3 hours? The reason was that paper was so difficult that all the questions were such that you have to think a lot, more of conceptual questions than numerical questions where you can do plus minus and get the answer. So now 72 questions, I was pressing that button, that end session. And I was thinking that end session is now, I'm going to go home. Essay section is not going to open anyway. But surprise, surprise, when I pressed the end session button, the essay section opened up. I said, what is this? I found essay section. Essay section was relatively easier than the MCQs. Attempted the essay questions. But then also I felt 72 questions में क्या होगा यार? 75 questions में क्या होगा? 75 का 75 थोड़ी correct होगा. But somewhere, I had that concept that all my questions have been answered conceptually right. So I don't know. I should be maybe out of 75, even if I get 60 correct or 65 correct. No, that will see me through. Because the essay section was relatively easy. But then you never know what happens in a professional exam. I came out, I told, it's gone, exam is gone. Result came, it was 400 out of 500. And I had put it in all the groups that my paper has gone bad and it is not going to clear in this paper. And I don't know from where the questions have come. It has not come from this material, that material, this material, that material. I don't know from where they have put the questions. So I'm not going to clear. Results came. It was 400 out of 500. Now I put the results in the group. Instead of saying congratulations, you have got 400 out of 500, there was a lot of backlash. And everybody was asking, you said that paper was difficult. How can you get 400 out of 500? I said, at least first congratulate me. I've got 400 out of 500. There was total backlash. Either that time you are lying or this time you are lying. I said, okay, I'll show you my marks. I forwarded that, took a pic of that, screenshot of that, and I sent it to them. They said that then first when you told us that paper was difficult, that is a lie. I said, how can I tell you what I have gone through? I have told you what I have gone through, but if you're not willing to believe, what can I do? So moral of the story is what? Concepts are good. You can get a chance through, even if your paper is difficult. You have not been able to complete your 100 MCQs. If your concepts are clear, and even if you have attempted less than 100 MCQs, you should be able to get through if all of your MCQs or majority of your MCQs are correct. So that is why I said that. Until and unless your concepts are strong, rock solid, it is difficult to clear. Right? So for that purpose, knowing what the students are going through, that they are not having proper understanding of concepts. Most of the students are college-going students. They don't have a base on which they can develop, and the institutes are not giving the support that they should have been given. And supplementing. And be free enough, feel free enough to contact me for any particular doubt that you're having. I'm there on the Telegram groups. I'm there on WhatsApp. You just have to message me. I'll get back to you within 24 hours. That is my promise. Okay. So we'll end the session here and I will come back with section B, part 2. Okay. Have a nice day. Bye. Take care.